All right, let's dive in. We're taking a deep look at S&P Global's recent second quarter and first half 2025 earnings.
Yeah,
You might be wondering, how do these massive information and data powerhouses really perform in such a complex global economy?
exactly.
Today, we're trying to cut through all the dense financial reports, the earnings calls, pull out the most important insights, maybe some surprising facts. So you can walk away, hopefully, well-informed about S&P Global's strategic direction and, well, their financial health.
And what's really fascinating here, I think, is that we're moving beyond just the numbers.
Right.
Our mission, really, is to uncover the core strategies that are actually driving those figures.
Okay.
Highlighting not just what S&P Global achieved, but, why it profoundly matters for them and for the markets they serve.
A shortcut to understanding a key player.
Consider this your shortcut, exactly, to understanding a crucial player in the global information landscape.
So let's start with the big picture then. When we sift through S&P Global's reports for Q2 and the first half of 2025, what were the headline numbers? What really jumped out?
Well, the overarching theme is certainly robust growth. I mean, for the second quarter, revenue climbed a solid 6% to nearly $3.8 billion.
Good 6%.
And for the first half, it was up 7% to over $7.5 billion.
So consistent growth there.
Definitely. And operating profit also saw some impressive increases, up 7% for the quarter and a remarkable 10% for the first half. That reached over $3.1 billion.
Wow.
And maybe most tellingly for investors, their diluted earnings per share, EPS.
Yeah, EPS.
That increased a healthy 9% in Q2 and 10% for the first half. These strong bottom line results really highlight S&P Global's ability to translate that top line growth into, well, impressive profitability.
It signals efficiency, right?
Exactly. Efficient operations and strong demand, particularly, as they noted, driven by their market intelligence and S&P Dow Jones Indices segments.
That's a clear picture of financial strength.
Yeah.
But for someone less familiar, what exactly is S&P Global's core business? How do they describe their role?
Think of S&P Global as kind of the backbone of market intelligence. They provide essential services like credit ratings, benchmarks for financial performance.
Benchmarks, yeah.
And powerful data analytics and software tools. They really touch almost every major global market, capital markets, commodities, even the automotive sector.
Right.
Their stated purpose, as they put it, is to accelerate progress.
Accelerate progress.
Yeah, through integrity, discovery, and partnership. Basically, providing the critical intelligence that helps businesses, individuals make confident decisions in, let's face it, a complex world.
Makes sense. Okay, now that we have that overall financial picture, let's unpack how a company this big actually generates its revenue. What do the sources tell us about their diverse revenue streams and their global reach?
It's an interesting mix, actually, and one that really speaks to their resilience.
How so?
Well, looking at the first 6 months of 2025, over half, 51% to be exact, of their revenue comes from stable, recurring subscriptions.
Predictability.
Exactly. That provides a very resilient base, sort of insulating them from daily market volatility.
Okay.
The rest comes from a mix of non-subscription and transaction-based activities, asset-linked fees, royalties. Gives them upside during periods of high market activity.
So a balanced approach.
It's a very robust financial structure, yeah.
And geographically, are they heavily U.S. focused?
Well, the U.S. is definitely the largest chunk at 61%, but they truly are a global enterprise. Europe contributes 23%, Asia 10%, and the rest of the world makes up the remaining 6%. This broad distribution isn't just about presence. It helps them mitigate risks tied to any single market or region,
Yeah, that diversification is certainly key. But it also hints at maybe a complex customer landscape. What did S&P Global's management say about the current customer environment? Are they seeing consistent demand?
They reported what they termed good demand.
Okay, good demand.
Yeah, from a wide array of clients. We're talking major players like banks, asset managers. They're actively seeking out S&P Global's data, insights, those powerful analytics workflow tools.
Sort of broad-based.
It's broad-based demand, which is always encouraging. They also mention that favorable foreign exchange rates provided a helpful boost to their revenue this quarter. Just a little tailwind there.
Got it. Now, let's peek under the hood, as you said, and look at the individual engines driving S&P Global's performance. They operate through 5 major segments, right?
That's right, 5 reportable segments.
Let's explore what each contributed to the overall picture. How about market intelligence first?
Absolutely. So market intelligence. This segment is a global provider of data and analytics across various asset classes.
Okay.
And it saw a solid 5% revenue increase for the quarter.
Pretty good.
Yeah. What stands out here is their strategic focus on growth through, well, targeted acquisitions and cutting-edge tech.
Like what?
They recently acquired TerraHelix, a firm that helps structure data models,
Okay, data structuring.
and BComM's AIS data services, which enhances their ability to track global maritime traffic, like ship movements.
Ah, interesting. Deepening data capabilities.
Exactly. These moves show a clear intent to do just that.
And you mentioned tech. What about AI? That's everywhere now.
Oh, yeah. And here's where it gets really interesting. Their aggressive push into artificial intelligence.
Not aggressive.
In just the last quarter, they launched 6 new Gen AI enhancements for customers.
6? Wow.
And rapidly rolled out Gen AI-driven filings analytics, leveraging a company they acquire, Pronto NLP.
Okay.
This isn't just, buzzwords. It's about integrating AI directly into their products to offer deeper insights, making it useful.
Right. Tangible benefits. Okay, next segment, ratings.
Next up, ratings. They're
Yeah.
independent provider of credit ratings, research analytics. This segment saw a more modest 1% revenue increase for the quarter.
Okay, 1%. Why the difference?
Well, a key driver here was an increase in non-transaction revenue. That's things like their ongoing monitoring analytical services.
Surveillance revenue, basically.
Right, surveillance revenue and growth from their Crizzle subsidiary. Transaction revenue, which comes from new bond ratings, saw a slight uptick in corporate bonds.
Right.
But this was balanced by fewer bank loan ratings.
Any specifics on issuance?
Yeah, overall billed issuance was down slightly, about 4%. But it's worth noting that high-quality investment grade and high-yield bond issuance both saw healthy increases.
So activity in key areas.
Exactly, signaling continued activity in those crucial parts of the market. The other category, including bank loans and structured finance, was down more significantly.
Got it. Moving on to commodity insights.
Right, commodity insights. They provide essential information and benchmark prices for commodity and energy markets.
How did they do?
Strong quarter here, an 8% revenue increase.
Nice. What drove that?
It was fueled by consistent demand for their market data, expanded product offerings, even increased attendance at their big industry event, CERAWeek.
CERAWeek, yeah.
And they also benefited from higher sales usage-based royalties. Basically, licensing their market data to commodity exchanges shows the value others place on their proprietary info.
Definitely. Okay, next up, mobility, the automotive segment.
Then there's mobility, yeah. A leading provider of solutions across the entire automotive value chain.
And performance here.
This segment truly impressed. A robust 10% revenue increase for the quarter.
10%. Okay. What's behind that surge?
It came mainly from their dealer and financial businesses, thanks to new client acquisitions, strong underwriting volumes, market share gains. Plus, favorable price increases helped.
Sounds like multiple factors clicking.
Yeah.
Any downsides?
Well, on the flip side, their manufacturing business saw a slight unfavorable impact. That was due to less activity related to automotive product recalls, which is typically a service area for them in that segment.
Okay, makes sense. But those are impressive gains for mobility overall. Which brings us, of course, to the big news about this segment. The planned spinoff.
That's right.
What's the latest on that? What does it mean strategically?
It's a huge strategic move, yeah. The full separation of mobility, which they announced back in April,
Right.
is very much on track to become a new, independent, publicly traded company.
Tax-free spinoff.
It's designed to be tax-free for U.S. shareholders, expected to be completed within 12 to 18 months from the announcement.
Okay.
They've already named Bill Eager, who was CEO of Carfax.
A Carfax guy.
Okay, as the president of mobility and the CEO designate for the planned standalone entity. So, leadership is in place.
Any nuances management mentioned?
Yeah, they did note that while mobility's revenue guidance was actually raised,
Okay.
growth in the second half might moderate slightly. They mentioned some auto activities being, quote, pulled forward into the first half.
Borrowing from the future a bit.
Potentially. And they also highlighted ongoing consolidation among upstream auto producers, which could potentially lead some clients to, adjust or drop certain product subsets.
Right. M&A impacts.
But this spinoff is a really clear signal of S&P Global's strategy to optimize its portfolio, focus on core strengths.
Makes sense. Okay, finally, the Indices segment.
Finally, let's turn to Indices, their global index provider.
And how did they perform?
This segment delivered an absolutely impressive 15% revenue increase for the quarter.
15%.
Yeah, really strong. The performance was largely driven by increased asset-linked fees, especially from popular products like ETFs and mutual funds.
AUM growth.
Exactly. Ending assets under management, or AUM, for ETFs using their indices surged a remarkable 25% year over year
25%.
to nearly $4.74 trillion. Trillion with a T.
That's enormous.
It really is. Higher exchange-traded derivative revenue, driven by strong trading volume and increased data subscription revenue, also contributed significantly.
So firing on all cylinders. Any new moves here?
They're also expanding their capabilities for wealth managers. There was a recent agreement to acquire ARC Research, a provider of investment performance data.
Okay, bolstering that area too.
Yeah.
So beyond these strong segment performances, S&P Global talks about this strategic framework, powering global markets. What are the key pillars there? How are they driving future growth, innovation?
Yeah, their strategic priorities are really all about delivering a, differentiated experience for their customers.
Okay.
First, they emphasize putting the customer at the core, focusing on enhancing support, user experience, making products easier to discover, distribute, deliver.
Makes sense.
Second, it's about grow and innovate. That's where Gen AI really comes in, being integrated into existing products, leading to entirely new offerings, plus accelerating growth in what they call transformational adjacencies.
New market areas.
Could be, yeah, expanding their reach. Third, data and technology, aiming to maximize the value of their enormous data estate, boost efficiency by integrating AI internally too.
Using AI on themselves.
Right. Fourth, lead and inspire, fostering an inclusive culture, promoting AI skills for employees. Exactly. And finally, execute and deliver. That focuses on optimizing capital allocation and strengthening risk management.
So a comprehensive framework. Did management comment on the timeline for these?
Yeah, the CFO actually mentioned they are, quote, planting seeds in many different areas with these product rollouts.
Planting seeds implies long-term.
Right. Indicating that the benefits will unfold over several years, driving the kind of inflows and revenue growth they've, become accustomed to. It's a long game.
Okay, so we've covered the impressive top-line growth, the strategic vision. Let's get into the nitty-gritty now of their financial operations. How are they managing expenses and cash flow to support all these ambitious plans?
Yeah, that's where the financial discipline comes in. They're heavily focused on driving productivity across various divisions.
Where specifically?
They specifically mentioned efforts in market intelligence and commodity insights. This has involved some, difficult but strategic decisions.
Like restructuring?
Including workforce reductions, as part of restructuring plans in both 2024 and 2025, which of course led to associated severance charges. Necessary but tough.
Right. And how does the cash flow look for the first half?
It tells an interesting story. Cash generated from their core operating activities actually saw a slight dip.
Oh, why was that?
Mainly due to higher compensation payments this year and also the absence of a one-time cash boost they had last year from some financial adjustments.
Okay, so timing and one-offs.
Pretty much. On the flip side, cash used for investing activities decreased significantly, which is good, primarily because they had higher cash outlays for acquisitions in the prior year, less M&A spending this period.
Right, and financing activities.
That increased quite a bit, largely driven by a substantial increase in share repurchases.
Returning cash to shareholders. How substantial?
Very substantial. S&P Global bought back 2.4 million shares for $1.3 billion in the first 6 months of 2025.
Billion, okay.
That's a significant jump compared to the same period last year. And they're planning even more accelerated share repurchases, or ASRs, in the coming weeks, totaling up to another $1.3 billion.
Wow, serious buybacks. Dividends, too.
Yep, they continue to pay out a solid quarterly dividend, 96 cents per share.
Okay. What about free cash flow overall?
Interestingly, their free cash flow, which is a key measure of financial flexibility, that saw an 8% decrease.
Why the decrease there?
Attributed basically to that dip in operating cash flow we mentioned, and also increased capital spending, investing back in the business.
Got it. Now, hold on. You mentioned something earlier. Their credit facility fees being linked to environmental sustainability. That sounds unusual.
It is quite progressive, actually.
Tell me more.
Absolutely. Their $2.0 billion credit facility, which backs up their commercial paper program, has its commitment fees tied to the company achieving specific environmental sustainability performance indicators, particularly related to emissions.
So they pay less if they hit their green targets.
Essentially, yes. It's a tangible way they're integrating ESG, environmental, social governance goals directly into their financial operations.
That's fascinating. I don't know how common that's becoming.
It raises that important question, definitely. How many other large corporations are adopting similar financial incentives for sustainability targets? Something to watch.
Definitely something to watch.
Yeah.
Okay, connecting this to the bigger picture now, beyond the internal operations,
Right.
what are some significant external factors, strategic decisions shaping S&P Global's future?
Well, a major strategic decision is that planned divestiture of OSTTRA.
Right, the joint venture.
Their 50/50 joint venture with CME Group focused on post-trade services.
Yeah.
They've agreed to sell their stake to KKR.
KKR, okay.
Big name?
Yeah. The deal values OSTTRA at $3.1 billion, and S&P Global anticipates a pre-tax gain of about $220 million from the sale.
Simplifying the portfolio again.
Exactly, a clear move to simplify and focus on core strengths.
What about the wider landscape? Taxes, regulations. From a taxation perspective, they're actively navigating some significant changes. Their effective tax rate actually increased this year
Why?
due to what they called a change in mix of income by jurisdiction, where they make their money matters for taxes.
Of course. Any specific legislation?
They're evaluating the impact of new U.S. legislation, the One Big Beautiful Bill Act, OBBA, signed into law recently. It affects various tax provisions.
Okay, OBBA, we just report what they're saying about it, obviously.
Exactly. And on the international front, they're monitoring the OECD Pillar 2 Global Minimum Tax Framework.
The 15% minimum tax.
That's the one. It's already in effect in several places. While they state it hasn't had a significant impact so far, they're closely watching implementation.
Especially with recent G7 agreements, right?
Precisely. Especially given the recent G7 agreement with the U.S. that could exempt U.S. companies under certain conditions. It's complex, constantly evolving.
Yeah, a lot for their finance team to track.
Mm-hmm.
What about regulations and legal stuff?
Well, like many large corporations, S&P Global is involved in various legal proceedings, subject to ongoing government and regulatory investigations.
Standard disclosures, usually.
Pretty standard, including by the SEC, covering areas like antitrust, ESG matters. They also mention settling a portion of an old class action lawsuit in Australia.
Related to pre-crisis ratings?
Related to CDO ratings issued prior to the 2005-2007 financial crisis, yeah. Though they emphasize having strong contractual protections.
Okay. Anything else on the regulatory front?
It's just a required disclosure, really. They noted limited, very small transactions involving information and informational materials with entities linked to the government of Iran as mandated by law. De minimis, as they say.
Got it. So, as we bring all this together then,
Yeah.
what does S&P Global's management expect for the rest of the year? What's their updated guidance, capital allocation strategy?
Okay, their updated full-year 2025 outlook really reinforces that consistent trajectory. They maintain their revenue growth guidance at a healthy 5-7%.
Okay, 5-7% still on track.
Yep. Now, their GAAP-diluted EPS guidance was slightly lowered,
Lord, what?
mainly due to a lower expected gain from those asset sales, like OSTTRA.
Ah, okay, accounting for the sale.
Right. But the low end of their adjusted diluted EPS actually increased, reflecting higher expected revenue overall.
So underlying business strength looks good.
That's the signal, yes. And their capital return strategy is quite clear. They plan to return approximately 85% of their adjusted free cash flow to shareholders
85%.
through dividends and those share repurchases for the full year 2025. Shows a strong commitment to shareholder value.
No doubt. Well, you've certainly navigated a complex landscape with us today, from S&P Global's strong financial performance to their pretty bold strategic bets on AI and market repositioning.
Yeah.
It's really a testament to how a deep dive like this can transform, raw data into clear, compelling insights.
Indeed. This deep dive reveals a company that seems adept at both, well, disciplined financial management and strategic evolution across its incredibly diverse segments.
So for your final provocative thought today, S&P Global is actively reshaping its portfolio, isn't it? Spinning off mobility, divesting OSTTRA, while simultaneously making these targeted acquisitions and investing heavily in AI.
Mm-hmm. A lot of moving parts.
Consider how this portfolio optimization strategy, aiming for greater agility, specialization, how that might become a blueprint, maybe, for other major corporations facing rapid technological change and evolving market demands. What implications might this have for the industries you're most interested in? Something to think about.